Okay. Welcome back to the channel, everyone. I hope everyone had a great weekend, a nice 3-day weekend. I hope everyone had a great Christmas and holiday. I know I did with my family. It was really a lot of fun. Having young kids, it's the perfect time. So really relaxed a lot the last 3 days. It was nice. It was really, really good to just unwind. The markets weren't open, so, no reason to wake up really early in the morning. So that was nice. Now we have 4 days left. 4 days left for, it's such a silly saying, but the Santa Claus rally. We'll see what happens, right? It doesn't mean that it has to happen. And I hate when so many people are saying it. I feel like just taking the opposite, just because that's what usually happens in the stock market. But, we'll look at things this morning. I'm going to get into the charts. I'm going to get into what I'm looking at. Some interesting charts. And the economic calendar is very nice this week. Obviously, there's not a lot on it. And the volume this week is going to be very light. The big traders, they're simply closing their books for the year. There's not going to be a lot of volume. So keep that in mind. And that's why we usually do see a little bit of a rally, because there's not those big, those big orders in there to sell into strength. But we'll see what happens. Maybe the opposite happens. Maybe we get a sell-off. Who knows? But I look at technical analysis, and that's what's going to guide me. Not just a bias, not just a catchy saying like a Santa Claus rally. Just not going to happen. All right, so let's just take a look here at the economic calendar first, which has been up on the screen for you guys. And like I said, nothing much going on here. There's initial jobless claims on Thursday. That tends to move the markets because, the labor market is something that the Fed is looking at. So if you get big misses or, better than expected numbers, it could technically give a little boost to the market. But, I'm not expecting much from any of this. Next week, Monday, again, is going to be closed, and then we have the NFP on Friday. So the jobs number is going to be huge, January 6th. So keep that in mind. And we have on Wednesday, January 4th, the FOMC minutes. That's something that can give the market, even though it's old data, it sometimes can move markets. But Friday, that's the big one, January 6th, the jobs numbers. All right, so nothing much on the economic calendar for this week. Very nice to see. As far as the VIX goes this morning, it's up a lot. All right, over 6%. Sometimes when we see this, when the pre-market is up and the VIX is up, we can sometimes see a sell-off at some point, either in the pre-market or during the regular session. Not that it has to happen, but sometimes we see that when the VIX should really be down when the market is up. The bond market, the yields are up a lot as well. Now, normally that's not a good sign for the market, but the market is up in the pre-market. So we have some things going against the grain this morning. The yields are up and the VIX is up. So, unless these start to reverse, you can see possible weakness off the open, but we'll just have to wait and see. So there's 50 minutes to the opening bell. We have time, and, we can see what happens there. All right. Now, looking at the compass, the SPY, this is what we want to look at on the daily chart. We can see this 20 EMA just about getting ready to cross over that 50 moving average. This is something that I talked about a lot, especially last uh, last week during our live streams and during our weekly watch list video. Every time that this has crossed over, we've seen further weakness. All right. Doesn't mean it has to happen that day that it crosses over. But when it does, we have seen further weakness. Now, the charts are looking to me, not the next 4 days. All right. It doesn't have to happen right away. But it looks to me like these lows are definitely going to be tested at some point. The timing on that, who knows? But, it really looks like that is going to happen. A lot of times when you see this not make a higher high, right? You have this high here. When you see it not make a higher high, and there's obvious weakness up here, there's obvious supply up here that just gets sold into every time we get there. The odds of the market just wanting to retest those lows looks better to me than retesting something that we already couldn't break out of on great news, that CPI report. It got sold into. So, we have these indicators above us, very bearish. So, the market in general, if I could take a month, 2 months out, looks like it wants to retest down here at some point. All right. Doesn't mean that in the next 4 days we can't see a boost up to 390s. That can happen. But as long as you hold this level here, so 378, 380 on the SPY, that's a very clear level to hold. So far we have. So we got to watch that during intraday the next couple days. If this holds, maybe you could get a little rally or at least close in this cluster before what I think will probably be a little bit more downside before we can finally start to get a better feeling on earnings for 2023. That's what everybody's waiting for. How are these companies going to navigate 2023? Where do they see the earnings? What do the earnings reports look like? That's all going to be important. And where do we see GDP going? Because we just got a very good reading for it. But if you're expecting recession, well, you're going to need 2 negative quarters of GDP growth, which we just don't have right now. So this could take some time. It's not going to be easy for 2023 until things start to, settle out a little bit. And that's why I'm going to go over some of the things that I like. But you can see here, this is the SPY, and I just want to go over the Qs before I move on here. We have a downtrend here. I put this line in this morning just because it's touched here so many times, even though this is really that key level here, this 294 and 295. But we are in a downtrend, very clear. The June lows didn't hold. When we came down to it to retest it, we broke down further, and this is where we currently are right now. The Qs look to me like if you got a little bit of a bounce in the next couple days, I do think it's going to be not a great year next year, just like it wasn't this year. I think there's going to be continuation for that tech sell-off. And you can see this area here was consolidating, and then it broke down. You have what I just told you guys about this 20 EMA. This has already begun that crossover, right? That we just talked about on the SPY. When these things cross, where are we? When these things cross here, not great for the break. It breaks down every time. So you got the cross here. Doesn't mean that you can't still see a little bit of a bounce, and this cross will still continue to get wider, even with a bounce up to 373, up to these, moving averages. It's possible in the next couple of days. If not, I mean, there's definitely more downside here. Just looking at the charts, looking at the technicals, This is what it's telling me. Why would you trade against this type of trend? It just doesn't make sense. What makes sense is shorting here, which is where we shorted in our Discord. On this CPI report, this was a clear area to have sold into. And that's exactly what happened. Okay? So we'll just have to wait and see what the next couple days on low volume. It's going to be very low volume. And that's why sometimes you can see a little bit of a rally. All right? There's not big institutional investors there with big sell orders to crush it yet. Now, that can happen Friday. It's possible going into the new year. We just have to wait and see. But the chart, the trend, it's obviously very bearish. We're under the moving averages. That's just bearish. It is what it is. As much as I want to see the market rebound, because it's a lot nicer to trade something that is going like this. From the bottom left to the top right. And all I did was put the minus sign in front of the Qs. This is what I would much rather trade. Something like that. It just looks better. It's just easier to see. Even though the trend was down, it was pretty clear. But this is just a nicer way. For me, I'm more of a long bias trader. It just is what it is. All right? But very clearly, we are not going that way. Until we do, until we see some support, I will not be getting into any tech stocks. And you can see here on Tesla this morning, looking at it on the 180 day, and take off these moving averages. This thing has just, it's fallen off a cliff. It's been really, really bad. And the RSI on this one, looking at it on the daily chart, adding this back, is just at the lowest levels that I think I have ever seen in RSI. Normally, you will see a bounce. You will see an RSI bounce when something is so oversold like this. But, you could have said that a few days ago. You could have said that a few months ago. But looking for just a small bounce. And that's what I would be looking at on Tesla, especially it being down to the 116 area this morning. The 115s it hit. That's crazy. That is a huge drop. There's big money coming out of this. This is not just one drop, one gap down day. This is big, big, big positions being unloaded. And it all starts with Elon Musk unloading billions and billions of dollars of his own company. So when you have your CEO selling everything, that's usually not the greatest sign. And what I do hate to do is catch a falling knife. But with an RSI this low, it's almost worth the chance, because you can see a very, very big bounce if you can see that strength in the next couple of days. So I will be looking at Tesla on the open, but I'm not going to get suckered into catching a falling knife. I'm going to try to wait and see what the market presents, because I want to be with the overall market this morning. Something that I noticed on gold. Now this is Barrick Gold. This is a gold miner. I got into calls on this down here. I'm looking for this breakout. The chart to me looks like it wants to break out to the upside. I think gold is going to have a very good year in 2023. So I'm trying to get ahead of that right now. I want to get in before the breakout. This has hit so many times. It's in an uptrend. This is a pattern that to me is an A+ setup. And I think that this is definitely worth the risk to reward. Not every trade is going to work out. Not every pattern is going to work out. But the probability of this working out is greater for me than it not working out. You need to find patterns like this and just take them when you see them. And if they don't work out, they don't work out. But this is a trading edge, is technical analysis. And this is looking to me like it wants to break out. Whether that happens or not, we just need to wait and see. I took contracts out a month, so I have time for this to play out. I don't like that the 200 moving average is right here. But what I do like is on the ETF GLD, gold ETF, it is over these moving averages. So that's a good sign. So that's what I'm going to be looking at there. Also have this reversal scan. I have Ford here at support. It never went lower than the June lows. So I look at this as a nice bottoming pattern here. Even though I didn't like that it's making lower highs, I think that we have an opportunity here for a bounce. And I don't like that the 20 has crossed over that 50. But if we can see a little bit of a bounce here, I like this for the short term. The RSI, very oversold. All right, so that's something else I'm looking for. And I'm setting alerts on a lot of other things, like Microsoft. I set an alert right here to get short. I think that Microsoft is going to revisit the lows, just like I see with the Qs, the SPY, and everything else. I think this could be a good trade down here on Microsoft and on Apple. If Apple breaks under these lows for the year back in June, and it is really hovering around here, if the market breaks down a little bit, or if Apple does, you're going to see the market really come on down. And the valuation on this is still very high. I know they make a ton of money, but there's going to be some consumer issues if there is a recession coming up. If this breaks, and I have an alert here, I will be looking for this to get short. All right, that's Apple there. Yeah, it's just you don't just go straight down without any type of bounce, right? So when something's going down, you can see a little bit of a bounce, whether it's a couple of days or if you're scalping intraday, you see a little bit of a bounce, and that's a bear flag, right? And then you go down even more. And that's exactly what I'm talking about. And I agree. That's exactly what is happening. It's been happening all year long. And thanks for the comment. But that is exactly, what I'm expecting. I can't see a way that this market does not retest these lows, even if you do get that bear flag here for that next move down. I don't like the way that this is setting up at all, and that's why I have the alert set here. I want to get a great entry. If I see a little, one of these little Santa rallies, right? I want to get in here for that move down into the new year, taking months out. I'm not doing same day expirations. I'm looking for a bigger move. I want to capitalize on a big move, not just a couple of points, but 30 points. That's what I'm looking for, a big trade. And that's what I'm going to do right here if we get there. If we don't, then we don't. But I'm setting alerts because that's what I'm looking at right now. All right, it's almost 9 o'clock. I think we went over a lot. I do also think, and where is it? I don't have it here. But NVIDIA, this one I think is also going to break down even further to retest these lows. We saw a nice rally, right? Nice rally, but we have pulled back since. This stock is ridiculously overpriced. Absolutely ridiculously high valuation, even though it lost half its value or more than half its value. It is still crazy, crazy expensive from price to sales to the PE, and we're not going to see that growth in earnings that we have seen. Because you can say, okay, this stock is like Tesla. It's 6 times sales, which is high. It was even more than that. But Tesla has a very good profit margin, and the earnings growth is ridiculous on that company still. That is not what we're seeing right now with Nvidia. And this is way, way more of a highly valued stock, overvalued stock than Tesla is. It just is what it is. So Nvidia, I do expect this to come on down. Now on the daily chart, it is holding up at this 50-day moving average. If we see a bounce, I would be looking to short this. I would be shorting into it for that next leg lower. It's a very clear pattern to me. All right, so let's see here on 3-year. All right, there's your clear trend line. You want to make a trend line that touches at least 3 times. Now this touches 6 times. That's a clear trend line. This right here would have been a very good time to short it. If you had this drawn out already, which I didn't, I just drew this trend line out now. I just noticed it right now, this trend line from back last November. All right, that is a a very clear trend on Nvidia, and this is, as far as technical analysis goes, this is going to come on down. All right, this has not settled yet. This stock has not bottomed yet, in my opinion. All right, so that's Nvidia. That's something we're going to add here. I'm going to add this to our Discord group, this trend line. It has pulled back a lot since, but if we see a bounce, those are your opportunities, right? Those are your opportunities to get into better areas to take this short. I don't know if I would want to take this short right at the 50 moving average. Wait a little bit. All right. So I think that's 9 a.m. I'm going to end the stream here. Hit the thumbs up if you've enjoyed the live stream. And I'm going to have some breakfast with the family. We're all home this week. So I hope that you guys enjoy. I'm going to be in our Discord, at the open and probably most of the morning.